Hola mi gente, welcome back to the channel. My name is Sean and this is We Are Investing, a channel that's dedicated in investing and personal finance. So I think that this video is well overdue, especially given the current climate that we are in. By that I mean the stock market's selling off a ton and a lot of fear right now. There is a quote, and I'm going to paraphrase this. Buy when there's blood in the streets, even if that blood is your own. And I do believe that is a good strategy. If you have high conviction in certain stocks and you've done the analysis, you've done the due diligence, and you come up with a fair value based on your calculations, and we're at or close to that point, then maybe it's time to buy some stock in that company. But also, what we are going to go over today, I think, is a signal that you can add to your toolbox or your tool belt to indicate when is a good time to start adding to your positions if we are selling off and there is a ton of fear. What is a signal that could potentially call the bottom of the drop, or a signal that if you take a look at the stock market 3 to 4 months out from today, we are going to be higher? This is a signal that Tom Lee mentioned in a video from the compound.
Now, we look at prime brokerage data, which not everybody who's watching this can access, but I think the simplest measure we like to use is the Aai Sentiment Survey. I think it's really bulletproof, and it's been around for more than 30 years.
This is for positioning.
For positioning, yes.
Okay.
And it's a contrarian signal. When the AAII bulls less bears is extreme negative, so minus 20 percentage points or worse, 100% of the time, it's a buy signal 6 months out.
Okay, because the market tends to trade higher, and then the people that had gotten bearish end up chasing it up.
Yeah, that's right, because when people are bearish, and so sentiment's really negative, they've likely sold. So that's the consensus view, and therefore good news can be good news.
Okay.
So if we look at the spreadsheet that I filtered out from 1999 to current, and then I have it sorted by bullish sentiment, we are going to take a look to see what happened with the S&P 500 on those reported dates. Did we see an increase in the S&P 500? Did people make money buying the dip when bullish sentiment was under 25% and the spread between the two was more than 20%? As you can see here by sell A22, this is where we're at right now, 20.96%, 46.72% bearish. So here we go. We're going to take a look at the first one, which occurred on April 14th of 2005. I have it already marked. This right here is April 15th of 2005. You can see by the top left, the date for that weekly candle is April 11th. So that's that time period right now. And taking a look at this one, we actually did see that that was close to the bottom. We saw a bounce on April 18th, 2005, and it did rally higher. If we zoom out a little bit more and take a look at this a little bit further out, we can exactly see what happened. We actually caught a bounce and we continued much higher. So that's a good data point right there. April actually did end up being a bottom and the stock market rallied. The next one on the list is May 26th of 2016. So let's zoom out and let's go to 2016. Right here we are, and let's take a look at May. Here we are again. This is the time right here. Actually, in this one, so this is May 30th, we did see a decline for the next 3 to 4 weeks, but then we saw a rally. So this one did not call the bottom, but 3 months out, we saw higher highs. So still an indication that we are getting close to the bottom. And if you take a look at a couple months out, we saw higher highs, which is what Tom Lee was trying to say in that video. The next one on the list is January 14th of 2016. So let's zoom out again. Let's go to 2016. Let's go to January of 2016. Right here we are. So in this case, we saw the next 2 weeks, we saw a little bit of a bounce, but then we dropped down to that same low just about on February 8th of 2016, which, as you can see by this vertical line, was another time where the sentiment was 20% different from bulls to bears. And then we saw a massive rally, and you can see that this rally just continued on upwards. The next one on the list is March 5th of 2009. So let's go to 2009, March 5th. Here we are, March 5th of 2009. This was a bottom. This sentiment survey did a really good job at pointing out a relative bottom. And like we said, following this signal 3 months out or more, we were higher. Next on the list is February 11th of 2016. Let's go to February 11th of 2016. Let me zoom out. Let me actually get to that date. So February 11th of 2016, here we are. Again, a nice rally. A couple months out, a year out, we're much higher. The next one on the list is April 11th of 2013. Let's take a look at April 11th of 2013, which I believe is right here. This one, I don't know why sentiment was so red. So many people were bearish, but as you can see here, we didn't really see much of a dip and the rally just continued. Moving on, we took a look at 2016. We've seen multiple data points of 2016, so we don't need to look at that one again. Let's look at January of 2008. This is going to be a very interesting data point. So let's zoom out and let's take a look at January of 2008. Right here, as you can see, this one is not a good signal. This one did not work out correctly. So in January of 2018, sorry, I keep on saying 2018. In January of 2008, and this is where we saw a massive drop in the stock market. This is S&P 500. And you can see in January, early January of 2008, the S&P 500 was around $1,300. It dropped to $666. So basically cut in half on February of 2009. This is the Great Recession right here. And this is when we saw a massive drop in the stock market. So this signal did not work then. It seems like a lot of people were actually, and it seems by the lack of vertical lines here, we're going to dive into this. I actually want to find this out for myself. But the lack of vertical lines here are saying that maybe bullish sentiment was relatively high given the conditions in 2008, 2009. We'll take a look at that when we're done going through all of our data points with bullish sentiment under 25% and that difference greater or equal to 20%. So let's move on to the next one, which is June of 2015. So let's go to June 2015. So here we are. Where's June? June 6th, 2015. Where we are, here we are again. This one, interesting. So we kind of dipped after that sentiment survey came in at under 25% and greater than 20% difference. We kind of stayed flat and then we didn't see the rally to October of 2016. So a good year plus until we saw return. So this signal did not work out. This is one of the false signals that we saw through the history of this data. So what we're going to do so I can remember is I am going to make sure that I highlight that cell yellow to indicate that that time it did not work. We're also going to indicate that on January 10th of 2008, it did not work either because we saw lower lows after that signal was initiated. Moving on, now we can take a look at July of 2020. So let's zoom out here. Let's go to July of 2020. So where we are, July 2020, here we are. I'm not so sure why sentiment was so low, bullish sentiment, but we saw a rally. So that's a good point right there. Next up on the list is October of 2019. Here we are, 2019. Here is October of 2019. Didn't have to zoom out. It's still within this time frame. And we can see that we saw a rally and then a massive drop, but that's because of COVID, which is a wild card. But either way, the couple months out, we saw higher highs. So it was a good time to put in some money into the market. Next on the list is May 12th of 2016. We looked at May 26th of 2016 just a couple weeks later, and we saw that that was a good data point, so I'm not going to go back to that. Next on the list is March 13th of 2008. So let's go back to the Great Recession and see what is actually happening here. So let's zoom back out, go back to 2008. Here we are, March. It saw lower lows, so that time it did not work out. We're going to make sure that we highlight that yellow to indicate that that was a false breakout. Sorry, I mean false signal. So next up, we're going to go to October or August of 2010. Let's go to 2010. August of 2010, here's our line, and we can see that we saw a nice move up, and then on February of 2013, another signal, another move up, so both of those are good. What I'm actually going to do here is I'm going to highlight all the ones that were good, so we can just, I'm going to highlight them green, so that way we can keep track and make sure that we know where we stand. Now next on the list is December of 2018. Let's take a look at December of 2018. zoom out to get to that date. So 2018 is right here. December of 2018, we hit that low. This is a really good signal here because this is kind of similar. So rates were rising in 2018. We saw that sell off. Here we are. We sold off. We kind of consolidated a little bit more and then we sold off again and then we rallied. So this might be a good signal. This is very comparable to what's happening right now. And we are actually seeing from the data that following that survey sentiment or investor sentiment survey being low on bullish sentiment and high on bearish sentiment, we did see a rally. So this is a really good point that this is something that I do like to see. So we're going to mark that one green and we're going to go to July 8th of 2010. Let's go to 2010 here. July 8th. Is this July? This is October of 2011. This is July of 2010. We see here, a couple months out, we are much higher. Good data point as well. Let's mark that green. We love to see green here. Now this is today's date or the most recent one. We don't know what's going to happen. And actually that's where I'm going to stop doing the research because now we're getting into a bullish sentiment that is higher than we currently have. And I'm more interested in seeing what the sentiment shows us or what the data shows us at this sentiment level or lower. Because it is my personal opinion that the next survey that we're going to see is going to show a bullish sentiment that is below the current sentiment of 20.96%. Now, one last thing before we conclude this research, we're going to take a look at oldest to newest. We're going to go to 2008, 2007, 2008, because I'm just curious where sentiment was during that Great Recession. So if we take a look at 2008, we were at 19.63%. We looked at that data point. Sentiment went up a little bit. And then during those steep declines, we actually had quite bullish sentiment. So it seemed like people were still bullish on the market, even though the economic conditions were not great and the market was falling. I'm not exactly sure why bullish sentiment was so high during that time. But this is quite interesting. I would expect that bullish sentiment would be far lower and bearish sentiment would be much higher, but that wasn't the case. All right, we went over a lot of data. It probably wasn't that entertaining. It's boring stuff, is research, but what's not boring is when you make money off of this research, which I hope we can accomplish. Now, let me know in the comment section down below what you think is going to happen. Are we going to start to see a rebound now? Or is it going to take a couple more months to play out? Are you buying now? Are you sitting on the sidelines? Or are you selling everything, which I highly do not recommend? Let me know in the comment section down below. As always, hit that subscribe button, ring that bell, and smash that like button. Join the Patreon if you want 2 free stocks worth up to $2,300. There's an exclusive link to WEBULL down below. But other than that, I'll catch you on the next video. It's been real. It's been fun. It's been real fun. And this is We Are Investing, and together we are invincible. See ya.